Hello everyone. Here comes the short review of Nasdaq 100 price action for previous week. So we will start with the new day opening gap and new week opening gap template. So new week opening gap means the price of close on Friday and the price of open on Sunday at 6 p.m. We marked that in orange. And then the new day opening gap, we have the closing price in the weekdays. So for example, if we look this one is fine. So we do take the opening price on 6 p.m. So this is when Wednesday trading starts, and the closing price at 16:59 on Tuesday. This we call new day opening gap, and it's in gray. So if we look for the past week, we see how we gapped lower on Sunday. And then afterwards, we have created a swing high. And then we created another swing high on Tuesday. So we have these relative equal highs. Then price has just been meandering around, but we still see some respect of the new day opening gaps and the quadrant levels as well. See how the bodies are respecting here. And as we suggested in the previous analysis, we had these relative equal highs, and we see like a huge move down up here. And that happened when Trump halted the tariffs for 90 days. Then we can see the perfect respect on Wednesday when we made the high of the week, using the new week opening gap from Sunday 30 March. Then price has been going lower. We had the market structure shift here. See how the bodies are inside the Thursday new day opening gap. And then we just been sort of meandering around the 50% level for the rest of the week. Next template, we're going to look on the continuous contract of Nasdaq. And this contract is quite nice when we want to see price over a bigger period of time. So if I look, for example, on the June contract, I will not be able to see much the chart before January. If I look here on the weekly. But if I use this one, then I'm going to be able to see a lot more price action. So it helps better to understand the bias and to see the PD arrays to the left of the chart. So very interesting here. I'm going to put this back. Also weekly. Okay. So if we look on the weekly chart, over here. So this was last week's price action. And we see how we have this fair value gap if we look on 30 of October 2023, and then we have this fair value gap. So I'm going to transpose these values to the time frames below the weekly. And then notice if we take the previous week range and we add the quadrant levels, we have the 75% level, and see how that is respected as the high of the week, which we made on Wednesday that we saw before. And here, notice the low of the week, which we had from opening on Sunday as we went down. See how it respects this level. So if we transpose the same level on lower time frames, we also had this level over here in green. I've marked that as the weak CA, consequent encroachment of the weekly bullish breaker from 9 of October 2023, as we see here. So as we know, the bullish breaker is like a low, a high, a lower low. And this is the candle that forms the bullish breaker over here. So this would be the bullish breaker. So this is the area where if we are bullish, we expect price to go higher. And then if we take the wick, the constant encroachment of this wick of the line, we see this level 16,749.25. So we extend that to the right. And notice how that level is being respected here on Wednesday. So basically Monday, we made the low of the week respecting the consequent encroachment of the weekly BC from 30th of October. And Tuesday we went a bit lower into this rejection block, and then Wednesday we come one more time down. We respect the other weekly BC above this one in yellow, and we respect that week CA, and then see how price just booms higher. Our bias for the week, as I've already shown, it was bullish because we've been going quite much down. And as we see, like here we have the 15 and 30 average. And the seasonal tendency in the last 15 years, it's around this area that it would go up. But in 30 years, it would go down. So we still have to look at the technicals. So these are the technicals that I'm showing right now. How we had these levels over here, and I was anticipating some reaction of these levels because we've been having like a huge week down the previous week. So some retracement would have been anticipated. And notice how those levels were respected. Now I will show how it looks on the June contract. So this is pretty much the same. I just used the continuous contracts to see more price action. But if we go on the June contract, here we notice Monday we had the move down. So here on the chart we can't see these areas. That's why I am using the continuous contract. So we had this move down, and then here we come. This is almost like consequent encroachment as well, as we can see, of this tail CA. So price is going a little bit lower in these areas because of something called filling the contract. So if, for example, I have a limit order set at 780, it's not going to be executed if it goes to 780. So it has to go a little bit below that so I can enter a long. So that's why sometimes we see this like wick going a little bit below. So we have to allow for that when we do our entries or when we do our stop loss in general. And then notice how price on Wednesday has been going down. Then it made this huge move up around lunch when Trump has said that he's going to hold tariffs. Notice this daily CB, how it's being respected and supporting price. See how the bodies are respecting it here. And then we've been going higher. And then we have this order block. So order block is like these two candles, consecutive up close candles, that should be like a barrier to price going higher. And notice how in the last one, it's respected. So it doesn't even manage to reach the opening price of the second order block candle, and then price reacts lower. And very interesting, if we add the quadrant levels of our fair value gap, so our fair value gap starts from here, and then we have this volume imbalance, so we have to include it, and then we have this second fair value gap, so we annotate all of them. And if we add the quadrants over here, sorry, it would be like this one if we don't include it. So we can also see it like this or like this. So if we add like this, then we see the quadrants and see how it respects the 0.25 quadrant level. And it stays below the consequent encroachment of this CB with the volume imbalance. And we will see later what caused this reaction in price over here. So we are in the general area. So when we look at our analysis, we always go from the higher time frame, from like the monthly or weekly, into the daily, and then we know like around this area our buys should be bearish. And then we go to the lower time frames and we can fine tune our entry to make it more precise. So here we see like the 4 hour. We see like how we have this order block on the 4 hours, and then we see this 4 hour big tail. So this already starts looking like a bearish breaker. We see like high, low, higher, high, and then we expect price to go up into it and come down. But I will narrow it down if I go more towards lower time frame. And then we see the 0.25 of this week and see how price respect that. It just does a mohawk below it and then even more here. So if we go to the 1 hour, this is one of my favorite time frames. So here we can see even better reactions. So we see here, this was the low on Sunday, 7 p.m. You remember over here on 1 hour. So this was that low on the weekly BC from 30th of October. Just shift it here. So now here's the continuous contract. You see it had that exclamation sign, and here is the June contract. And then we see here coming down again at 2 a.m. one more time accumulating longs. And here we have the shift in market structure. So we have the swing high, swing low, here, the shift in market structure. Notice here, it creates a fair value gap. This is the 22 model. And then notice the perfection here, how it touches the low of it. Here we do like a huge Judah swing down at the opening price. It comes here, it touches the mean threshold of this order block. So we can take it like this. Notice how it's just above the mean threshold. So one more time accumulating long orders. Notice how the body is staying above it. Notice how the body respects the quadrant level of this week. So 50%, and notice how it respects the 0.25%, almost perfect. So it's making this little mohawk below so the long order can actually happen. And here it's respecting the mean threshold. And then price goes down, goes up. So notice the perfection of these levels. And then price goes up. So let's go back to our June contract. So here we had those levels, the big wick, the big tail going to mean threshold, then the fair value gap. And notice how we are in the new week opening gap. Then we make the swing high, swing high. Here is the 25% level of the previous week. Then we come lower. See how the bodies are staying above the 25% quadrant. Here above the 50%. And then we're going higher. And this is the high of the week. And there's a lot of confluence on this level. So as you remember, the bearish order block, the bearish breaker that we mentioned before on the 4 hour. So it was with this big tail. If we narrow down inside of this one, we see it's this one over here. So we take the last down close candle. So this is the last down close candle, which I mark in pink over here. So like this. Then I extend it to the right. And notice how perfectly it respected over here, the mean threshold of that. And that is like the high of the week at 3 p.m. on Wednesday. Also, this is the 75% quadrant of the previous week, 19,380. Notice here, 19,380. Also, there is a 1 hour CB. So being this one, this CB, we take the volume imbalance and we see the 50% retracement level, 50% consequent encroachment. But this CB, we can also consider it without the volume imbalance. So there are two ways to do it. I usually prefer to do it with the volume imbalance, but you can also do without it. And if we do without it, here, this is the high, this is the low. So this makes the CB without the volume imbalance, and we see the consequent encroachment level. So 3 levels of confluence for this trade. Keep it back as it was. But my favorite one is like this one, the 75% retracement level, and then the 1 hour bearish breaker mean threshold. And then we have the price reaction. And here we notice this BC over here, the 1 hour. So here, notice how this acts as inversion fair value gap. And then see how price goes lower after that. Can take this tail. Notice if we take this tail, how this is the consequent encroachment of the tail. And then here, I can go lower. It respects this level. 185.75. And then if we look at the high of this level, 186.5. So it gives 0.75 of a handle, and that is what it needs to go a bit above it. So it executes the short, and see how that is happening at 3 a.m. So during London session. Then we make this huge CB and see how we're below the consequent encroachment. This shows bearishness. And here we have this mitigation block, because this is a little bit higher. So 187.75, 186.5, the highs of these two. And it comes into the mitigation block and the CB, and then price is going lower. We're coming back below the 0.5 of the previous week. And then we meander around the upper half of the fair value gap from Wednesday. This is also a bullish breaker here. So if we take, this is the highest one. If we would break into the 15 minutes, this red candle will also be probably yeah, a bullish breaker, more finessed. But on the 1 hour, we see this is the 1 hour bullish breaker of Tuesday. Keep it to the left so it's easier to read. And so we are above. So see here, we are above the BC 1 hour PM. See how perfectly this 9 PM candle touches it. And then we are going also in the bullish breaker. So, and notice how the bodies are in the upper quadrant of the bullish breaker. See here. So that shows some bullishness, but it's just consolidating around. So Thursday and Friday were mostly like consolidation session. I was happy to close after Wednesday. So Wednesday was a very nice range day, even if it was very crazy volatility, maybe the craziest I've seen in the last 2 years. But however, like one thing I've learned is like if you make money earlier in the week, it's better not to trade on Fridays. You can close the week early because it happened a few times, and it's something that happened to traders. They make money early in the week and then they give it all back on Friday. And that doesn't feel good to go into the weekend and yeah, and give it back. You will just like ruin your weekend. So if you made money, it's better not to trade on Fridays. And notice how we had this huge move up on Wednesday. So we expect the next session to be more consolidation or seek and destroy style. And then notice how here we had the daily CB. So if we go back to the daily and see how it closed here at the 0.25 level. And we were above the 0.5 of the previous week. So this is a review for the week. So I'll make another video, a short video that shows what I expect to happen next week according to the technicals and the seasonal tendencies.